All right, good afternoon, everybody. I'm Leah College, an investment counselor here at RealWealth, and I'm so grateful that you guys have decided to join us for our regular live Thursday webinar. I've missed you. It's been a while since I've been on one of our Thursday webinars. As you can see, my background changed once again. We just completed another big cross-country move from Boston back to our home state of Texas. We're settled now in San Antonio and are excited to call it home for the next little while. So it's good to be back with you guys. We've got a really great presentation today. We talk a lot about markets, we talk a lot about due diligence, but very rarely have we sat down and kind of walked through the process of acquisition through a RealWealth property team. So you've probably heard us mention many times before that we have put together an investor checklist, which kind of outlines our process here at RealWealth for, how you go about doing this and purchasing a property, but we haven't ever gone through it line by line. So that's what we're going to do today and kind of give you some insight into some processes that you can implement as you're working with our property teams. So thanks again for joining us today. We're going to try to be a little bit interactive with you guys today. So I've got my questions box here open. Give me a shout out there to test out your questions box. I'd love to hear where you're joining from. If you can give me maybe the city and state where you're watching from, or the country where you're watching from. That's always fun to see how broad our reach is at RealWealth. Fairfield, California. Hey, Mark. Pleasanton, California from John. Charlotte, North Carolina. Kareem. Hey. San Francisco Bay Area. Connecticut. Fatima from Roseville. Fullerton, California. Howdy from Orange County. Howdy from Texas, Winston. Hey from Jacksonville. Malibu, California, Oklahoma City, Chicago. Hey, Rachel in Boston, and Patrick, good to see you guys. Ocean City, Maryland, Palo Alto, Corona, California, San Diego. Lots of our California folks, but always great to see that we're bi-coastal. Anybody joining from out of the country? I know we've got some Canadians on here. I talk to Canadians every week. Hey, Dan from Reno. Austin, Texas. Tom, you're not too far away from me. Good to see you here. Howdy to another Texan. All right, well, good to have you guys all with us today. I got to start off with our standard disclaimer. You know it, so let's say it in unison here. The strategies that we're going to talk about in this presentation today might not be appropriate for you. So there are other options that we're not going to discuss that might be more suitable for your specific situation. So as always, you want to be sure to consult your personal advisors, your accountant, your tax advisor, and or your attorney to discuss your specific situation. Past performance is no guarantee of future results. Real estate purchases are, of course, subject to investment risks, including the possibility of losing all that you invest. So while we make every effort to maintain accurate and current information and connect you guys to the best people out there, the possibility of errors and or updates always exists. So remember, we streamline this process, but we don't eliminate the risk. Not possible. Okay, so in keeping with our theme of engagement, I want to kind of get a little bit of a pulse for everyone's experience level. So we are going to try out a new poll feature on GoToWebinar. I've got my women in the wings here that are going to execute the poll for us. So go ahead and give us an answer here on your screen about what your experience level is with real estate. Are you a beginner? Would you call yourself a beginner? You're new to this, but ready to learn and ready to invest. Are you a dabbler? So do you own maybe 1 to 2 properties and you're looking to expand? Or would you consider yourself a pretty savvy investor? I own maybe 3+ stores and I'm always searching for new opportunities. So go ahead and let me know your experience level, and then we can all kind of see that the kind of company that we're in today. All right, Celia, if you see enough responses come in, go ahead and wrap up that survey. Everyone get your answers in real quick here. All right, wow. I promise this is real results here, split in thirds. That's good to see. So as you can see, I know I've talked to some people before in strategy sessions who feel like maybe they're, a small fish in a big pond and that everybody is an expert investor at this network. And that's clearly not the case. The experience is pretty evenly spread across the room. So really glad to see that. All right, Celia, can you close the poll? All right, cool. So I want to start off by telling you a little bit about my story, because I think that's always helpful to kind of understand the context of where I'm coming from. As I mentioned, I am an investment counselor here at RealWealth. Before I came to work for the company, I was a member just like you. So I'm a real estate investor. I am married to an active duty Army officer. That explains all the moving. We've moved 10 times in the last 12 years. And it has been just the most enriching and wonderful experience. We've gotten to live all across the country, in Asia, Europe, and South America, and are just so grateful for this very rich life that it's given us. But at some point, we realized that we wanted to start building a business for ourselves to prepare for retirement, and to give ourselves the best shot at having freedom. And getting to live life on our own terms. So we started looking for ways to passively acquire investment property. We bought our first buy and hold rental about 11 years ago now. And I would say that we were in that dabbling phase for quite a while. It was working, it was doing well, but it took us about 6 years to really realize, wow, this is a strategy that we should replicate and that we should go pretty hard on to really give ourselves a chance at having that freedom. So we had flipped a property right before we moved to Europe, freed up a bunch of cash, and knew that we wanted to get it reinvested into real estate. And so from overseas, we were just researching and finding networks and finding different companies that could help us get reinvested, and came into RealWealth network, and scaled our portfolio pretty successfully from overseas. So RealWealth has personally had a huge impact on my life, and just really obviously never saw myself eventually working for the company too, but it made investing passively from overseas, from anywhere, possible. And so we continue to buy through RealWealth and scale our portfolio and acquire rentals all across the country. So, and now I'm just thrilled to death to get to help you guys do the same. So a little bit about how we help our members. So we are an education company. We generate a ton of free content teaching investors the fundamentals of buy and hold real estate. Oh, sorry, my finger here is a little happy on the trigger. So we do a lot of research into markets. We aggregate a lot of data to kind of point us to the markets that meet the investor's criteria. We present all of that information to you, and then we go out and make connections in those markets with people who give us a tactical means by which to acquire those properties. So we have industry connections. We've got connections with property managers. We've got connections with brokers who can help you actually apply the knowledge that we've given you for free beforehand. And then you have access to an experienced investment counselor like myself. There's actually 4 of us: Ben, Joe, Aristotle, and myself. We are all investors, all buying from these teams as well. And when you become a member of RealWealth, you're automatically assigned to one of us, so that you have a sounding board and someone to talk to about your strategy and about different markets, and kind of coach you through this whole process. And then the 4th benefit, you get the combined power of the collective. So the strength of the network is our scale, right? And you guys are a part of that. So we have leverage with these companies that we work with. As you can imagine, we hear very, very quickly when things are going particularly well in a market or with a team, and vice versa. And that allows us to just be really responsive. And it is truly the strength of the network. So if you become a member of RealWealth, if you're on this broadcast live, you are a member of RealWealth, but we are going to make this content, we're recording it, and it's going to be available for anybody. So if you want to tap into all of these amazing benefits that come to you at no cost, you can just become a member by going to realwealthnetwork.com and creating an account. It's free to do so. So as I mentioned, this is a resource that we've put together for you guys we call it our investor checklist. I don't know if there's anybody else in here with me who loves a checklist, this helps us keep kind of the process streamlined. It's a good tool to reference. We've actually added this to the GoToWebinar panel. If you see, there's a handout available. We've got the PDF version there for you. This just underwent a refresh. So if you have seen our investor checklist before, definitely download the new version today because it is brand new today. We've decided to expand on a couple items. We added a page 2 that we'll talk about a little bit today that gives you some special instructions for new construction and multifamily. And then we even talk about some supplemental inspections that you can add on. So today we're going to go through this, so feel free to follow along and definitely save this and reference it as you go through this process with RealWealth. I want to remind you that we are recording this webinar. We will have it posted to the investor portal and our YouTube channel by tomorrow at lunchtime. So at some points, I think this is going to feel like an overwhelmingly large amount of information to process. But don't put pressure on yourself. You can come back and revisit this and reference it at any time and rewatch this webinar. So here is where you can find the investor checklist when you're logged into the investor portal. So in order to access the investor portal, you do have to become a member. So again, another plug if you're not already a member to become one, but you can always access it right there on that investor portal. So I broke this down into 3 kind of phases because I think it helps me kind of compartmentalize the different approaches. There's no need for us to focus our energy as investors on phase 3 at any extreme depth, maybe just really briefly, but there's no reason for us to focus our energy and our brain power on phase 3 when we haven't even made it through phase 1. So I kind of broke this down into these 3 sections. So phase 1 really starts with us kind of educating, identifying where the opportunities lie, getting ourselves financially prepared to execute a strategy. It's all about preparedness. Then we move into phase 2, which is a little bit more actionable. This is where we start the process of selecting a property. This is where we start the process of conducting our due diligence on a property. This is when we enter the escrow phase. So we've identified a property and we're in the process of hopefully closing on that property. And then we move into phase 3, which is closing on that property, it officially becoming your investment, collecting the rent checks, the fun part, and then of course monitoring the investment. The real work of owning the asset. So we're going to go through this in these phases. I think the majority of our time is really going to be spent on phase 2. I think we've talked to you guys at a good length about education and all of the resources that are available to you. So phase 1 will be kind of brief. Phase 2 is really where we're going to spend the bulk of our time today. So starting with phase 1, if you're following along with that investor checklist, we've got steps 1 through 5 falling in phase 1. So step 1 is to know your strategy and understand your goals. This is really about education. I always tell people the reason that everybody is not investing in real estate is because there's a learning curve. There's a lot to figure out, and it's a little bit intimidating. So for some of you, you're going to be in phase 1 for a little while. Educating and learning some of the basics and the fundamentals. And this is where we've really put together a lot of resources to help you with this process. Same place on that investor portal, when you're logged in, you'll see that we have put together a new investor curriculum series. It's just 4 short 15-minute videos that kind of get you started in this process. And then of course, you always have your investment counselor. So we love to hop on calls with investors to kind of talk through big picture strategy and help you kind of hone in on where you're at and where the best place for you to start might be. And then of course, we can get into conversations about market selection and resources. Step number 2 is all about identifying a market and studying the market. So as I mentioned, we aggregate a lot of data on all these different markets that make the most sense for buy and hold investors. And in our education, we've taught you how to analyze these markets and what you should be looking for. And then subsequently, we have gone to, on the investor portal, we have made a landing page for each market where we have these established relationships. And we've teed up all of that information for all of these different markets so that you as an investor can come and kind of buffet style survey, who we work with in that market, what are the economic drivers of the area, what are some typical properties and deals that they have available, what is property management like? I mean, you name it, we go really in depth. Those webinars are usually an hour or so, just going and getting you kind of familiar with what's happening in that market and who that market might be optimized for. So again, become a member of RealWealth so that you can access all of this great content that's market specific. And certainly, as you're ready to start putting that plan together, this should be your first step, watching those market webinars. Step number 3, very tactical. This is all about financing. I've said it before that your financing is the gas in the tank, and it's great to have a destination in mind, but if you don't have gas in the tank to get you there, you're not going anywhere. You're just dreaming. So number 3 is get yourself pre-approved with a RealWealth preferred lender. And again, you can find that list of lenders on the investor portal there under the lender section. All 5 lenders that you see there are licensed in just about every state where we have property teams. So the benefit is that you don't have to have narrowed down a specific market before you commit to a lender and before you know exactly what you can borrow. Step number 4 might not apply to you, but if you are doing a 1031 exchange, preparedness, I think, is essential, especially now in today's market where inventory is moving at an alarmingly fast rate. Being prepared is, I think, the most essential step with conducting a successful 1031 exchange. So you want to be doing your market research far in advance. I think the tendency for a lot of investors, at least the investors that I speak to, is to focus on the relinquished property and try to get that plan for selling the property, even get it listed before you even dedicate the mental space to thinking about the replacement properties. But in today's market, that's a recipe for high stress and maybe for identifying properties that you wouldn't necessarily want because you're in a pinch, you're in a time crunch. So we recommend that, again, due to those timelines, that you do avoid generally new construction. Some new construction opportunities can work, but they're always a little bit risky because we all know that construction usually runs long. And then I think that third point there is a little bit redundant, but right now 1031s are absolutely possible. I'm talking to 1031 investors every day, both at the front end of their exchange process and at the back end when they're closing on all of those replacement properties, but it's definitely a little bit tricky and will definitely require some preparedness and some advanced research. Number 5, contact the property team of the market that you're interested in. So up to this point, you've been researching, but you've kind of remained anonymous to this property team. But ultimately, in order to take next steps in a market, in order to get access to their real-time inventory, to see the listings they have, in order to talk about specific neighborhoods and specific areas, you have to break that fourth wall and reach out directly to the property team that's in that market. So you can find, this is a little screen reel here of the investor portal. Obviously, this is this will be a public video for everybody, so we can't show you the contact information for our teams or how to find that. But when we get back to this homepage here, you will see, give it 1 second, right there under Invest. Single family rentals, multifamily rentals, or new construction. That's where you can hover over to find each of the market pages and get to the contact information for each team. All right, so those last 5 steps were all kind of focused on preparedness and getting ourselves ready for action. But now we're moving into phase 2 of the RealWealth investor life cycle. So this phase is all about property selection, conducting due diligence, and getting through your escrow period of being under contract on a property. So we're going to go through now steps 6 through 14. So step number 6 has to do with kind of verifying the product type. I think it's worth explaining that at RealWealth, our property teams have really 3 primary property types. And in order for you to conduct your due diligence appropriately, I think it's important to kind of understand clearly what those 3 product types are. So the first is a real income property. The industry sometimes refers to this product type as a quote unquote turnkey property. We don't love the term turnkey because it's a little bit ambiguous and misused by a lot of different companies. So we defined our own definition of a turnkey property. So real income properties are properties that conform to our defined real income property standards. And I've got a picture coming up for you where you can find what those standards are. But basically, we sat down with all of our teams and came up with a clear list of expectations of purchasing a real income property. So we've defined, what the life expectancy should be on some of those major components, and what, me as an investor, what I can expect the condition of that property to be if I'm buying a real income property. Now, in today's market, finding that distressed inventory, these teams, their ability to renovate those homes, it's becoming more and more challenging to find homes that reno is justified for the team. So we have the second product type. It's called a rental resale. So these are properties that do not conform to RealWealth's real income property standards. So these homes have not just undergone a full renovation within the last 12 months. This is pretty open-ended, and that's intentional. What you should know about a rental resale is that oftentimes these homes are already tenanted. A lot of times they're already under professional property management of the preferred management company that we use, but sometimes there are some deferred maintenance items, and sometimes the home might be occupied by a tenant who's renting a little bit below the market rent. So as an investor, you have to be thinking about the future potential of the property, and you also need to be willing to kind of negotiate with the seller to ensure that it's a property that you feel okay with the condition that it's in. So most of our teams, we've really tried to encourage them to use this terminology so that it's familiar to you, so you can know, okay, is it a real income property or is it a rental resale? But just fair warning, not all teams use this exact same language. What's important for you as an investor is to understand by definition kind of how they might be different, because you can't purchase a rental resale and then 6 months down the road be mad at them because it doesn't conform to the real income properties. It was never a real income property to begin with. And then the third product type is pretty self-explanatory. That's new construction. So these are brand new construction homes that were built for the purposes of being made into a rental. So some of our teams are the builder developer themselves. Others have identified local builders who are building tenant optimized properties for them. Most are pre-construction, meaning that they're not built until you contract them. And most of them are in infill lot locations. So real quick, where to find those real income property standards? You can find them again on the investor portal under resources, real income property standards. I think the next slide, I've got a screenshot of those standards. So you can see we've kind of defined some of the expectations for all of those major components. So if I'm purchasing a real income property from a team, what I usually request from them as part of my very kind of preliminary due diligence on a property is I request the scope of work, so that I can see exactly what they plan to renovate on that property. Because oftentimes they're marketing the home before renovation has even commenced or in the middle of renovation. But that scope of work allows me to kind of compare it to the real income property standards and have a good idea about whether or not this property is going to conform to those standards, and hold the teams to it. They've all agreed to renovate to this particular standard. Here are some tips. This is found on page 2 of the investor checklist. Some specific due diligence suggestions for new construction. You definitely want to get a home inspection. Just because a home is brand new doesn't mean that it doesn't have problems. So you absolutely want to get a home inspection, get a punch list there so that you can see exactly what needs to be taken care of before you'll actually close on the property. Find out what's included. I taught a whole class on new construction investment properties, and we discussed the fact that some builders have kind of a turnkey new build product that has the blinds, the appliances, everything, and others that might not be included. So you've got to kind of understand the scope of what's included in your new build. Understand whether the property is an infill lot or a new subdivision. The new subdivision concept, we've heard this mentioned a lot in headline news probably. It's called typically the build to rent model. And this is a concept where the entire development is a development of rentals. And that is not generally what we recommend you buy in. In fact, we recommend that the homes that you purchase, if they're in a new housing development, you generally want to see that they have no more than 30% are rentals. That usually protects the property value a little bit more, can mean a little bit more appreciation for you. Okay. Number 7, visit the area. This one has been a little bit hard over the last year, but thankfully things are opening back up. I think it's always a good idea if you can travel to a location to go and do that. Seeing is believing sometimes, and it definitely can help you understand the growth of an area, the connectivity of a city, can really help you kind of understand the buy box of that particular team in the market. Something I always encourage my investors to do is, these site visits, particularly now where inventory is moving so fast and is so limited, the purpose of these trips is not so much to go and cherry pick a specific property, but more so to kind of calibrate and orient yourself to the market as a whole. But of course, if it's possible to tour specific properties that are available while you're there, that's all the more helpful too. Just know that, again, in today's market, that's a luxury that we might not get with how quickly homes are moving. But all of our teams are more than happy to accommodate site visits. They'll take you to meet the property manager and get you familiar with the area so that you feel really good about committing to a particular property when it does come available in one of those areas that you've seen. Number 8, connect with a property management company. So we've got short videos that we've recorded on property management where we do kind of a deep dive into their fee structure, kind of understanding their staffing and experience. But during this phase of being an escrow on a property or being very close to putting a property under contract, I always try to connect with the property manager, because ultimately that's the long-term relationship that really matters when I'm purchasing a property. I always get on the phone with the property manager and do kind of a consult call. I usually personally get on the phone with a couple property managers in that area, the RealWealth preferred property manager, but also maybe another 1 or 2 out of network, just to throw another option out there to make sure that I'm purchasing or considering working with the best property management company for me. I always ask to see a copy of the management agreement so that I can review the contract and know exactly what I would be committing to with that property management company, and make sure that you understand and agree to all of those terms. We all have the tendency to just hastily sign contracts without reading them word for word. And then, 6 months to a year down the road, we realize that, hey, there's this one little thing that I wasn't aware of. And the excuse that you didn't know when it's in the contract that you signed is not a valid excuse. So be sure that you understand that contract and that you've read it very carefully. I always also try to understand their process for screening and placing tenants. As a landlord with some scale, I'm really not interested in getting involved in the weeds of tenant selection. What I'm more concerned with is understanding the general process that the property manager goes through with applicants. What is the minimum credit score requirement? What is the minimum income requirement? How do you verify previous, landlord references? How do you verify employment? Kind of understand the general process that they apply, and then decide whether I agree with their process and their standard or not, and trust the company that I'm hiring to implement that process, right? So understand exactly how they place the tenants for you. Number 9, okay, so we're moving into contracting a property now. So when you get a contract for a property, it's always worth, again, reading it in its entirety, but verify that there are the appropriate contract contingencies. Now, most contracts include a third-party appraisal contingency, an inspection contingency, and a financing contingency, but not all do. So you want to be sure that they're there. So basically what these contingencies will do, in the case of the appraisal contingency, that clause says that if in the event that we order this third-party appraisal and the appraisal comes back low, meaning I'm contracted to purchase this price for more than what the appraiser is telling me it's worth, if I have this contingency in my agreement, it states that I can choose to terminate the contract and move on for a different opportunity. Same thing with the inspection contingency. So my offer is contingent on this property passing a satisfactory inspection and having the issues resolved with the seller before closing. So if there's a major inspection issue that you find that maybe is just so severe, you don't even care what the team would be willing to do to fix it, you're just no longer interested, this clause allows you to terminate the agreement because of that. Keep in mind, I have noticed that a lot of the new construction contracts don't offer inspection contingencies, and that is because they offer builders warranties on the property. So basically they're saying, no, we're going to fix anything that is in default on the property. You're not able to break this contract because of an inspection item. So if that's not something that you are comfortable with, then don't enter into that contract agreement, or see if the builder is willing to make an exception and make it an amendment to that specific contract for you. But again, in the seller's market, very few sellers are willing to modify their contracts for you. And then financing. So most contracts do include a financing contingency that basically says, hey, if something happens to your finances, if you lose a job, you know, if you're unable to qualify for the loan for this property for whatever reason, you can terminate the contract without penalty. Sometimes you forfeit just your escrow money, depending on the contract, but look for these contract contingencies. We at RealWealth are not ensuring or guaranteeing that these contingencies will be in your contract. We're simply telling you we recommend that you sign contracts with these contingencies, but certainly if you feel comfortable moving forward with a deal that doesn't include these contingencies, you can absolutely do that. Number 10, this one you've all heard before: order an inspection and an appraisal. So we'll start first with the inspection. So I get this question a lot from investors. You know, they want to know, I don't know anything about Cleveland, for example. You know, how do I go about finding an inspector there? And the answer to that is the property team that we work with there will refer you to several local home inspectors. Now, I know what you're thinking, because I feel like I thought this too when I first joined the network, and that is, okay, isn't there conflict of interest if the person that rehabbed the home or the person that's selling me the home also sends me the inspector? Like, how do I know they're not in cahoots with each other? And that's a very pessimistic, you know, negative brain thing to think, but I went there, so I'm sure you maybe have gone there too. So what I did was I conducted my own due diligence on the inspector. I called all of the inspectors that they recommended, had a little interview with them, and talked to them about their process. I even asked them point blank about their relationship with the property team, and how many homes they inspect for them, just so I could understand a little bit more, you know, kind of impromptu about their relationship with the team. You can always hop on Google, Angie's List, find your own inspectors. That's certainly something you can do, but you ultimately get to choose the inspector that you want to send out to the property. If you are purchasing a renovated property, something else I always do is I send the inspector the scope of work so that they can see exactly what items were going to be addressed by the property team. And then they can go and look on my behalf to make sure that those items were actually done and that they were done correctly. You can always order, oh no, I think I have that on the next slide. Let me hold off on that point. You have some supplemental inspections as well. So this is part of our new addition to page 2 of the investor checklist. You know, a standard full home inspection does not include some of these more specific items. They usually will charge an additional fee for those, or sometimes you have to send out a completely separate company to do that inspection. These are totally optional. We don't have a hard and fast rule about which ones of these you should be paying for, because everybody's risk gauge is a little bit different. But we listed some of the very common supplemental inspections that we recommend. Sewer inspections, we recommend these for older homes. If you're buying a home that's older than 50 years, you know, that's a lot of time for roots to grow into the pipes under the property and cause some problems. I have found this to be particularly problematic with my properties that have basements. So we definitely recommend in older properties that you get an inspection of the sewer lines under the property. You can order a lead inspection. This is really, you know, only applicable for homes that were built prior to 1978. You can always read the seller's disclosures. They should disclose if there is lead-based paint present. If they say that there aren't, then we don't generally recommend that you get a lead inspection. Mold. This one comes up a lot. Mold is present in every home. But extremely high levels of mold can be extremely problematic for your tenants. So we encourage this. If your general home inspector finds some things that look to be mold or that look to be significant amounts of concerning mold growth, then we do recommend that you get a subsequent mold inspection. Radon, this one sounds scary. This radon is a natural occurring gas. Again, it's present everywhere. It becomes dangerous in high volume. It's emitted from the soil. And so this is particularly common in, again, homes that have basements, maybe homes that have some cracks in the foundation. When that radon gets trapped inside the property, it can cause lung cancer. So again, your general home inspector can usually conduct a test for this, but they sometimes charge that additional fee. And then termites. Termites can be a problem anywhere, but particularly in those warm, moist climates. There's some loan types that even require you to get a termite inspection. They're pretty inexpensive. I generally, for most transactions, don't recommend you pay for an additional termite inspection unless, again, the general inspection revealed that there are likely some indications of a termite problem. So all of these totally optional, totally up to you if you want to pay for them. In the grand scheme of things, they're not that expensive. So if it gives you peace of mind, go for it. The more you know about a property, the better. Okay. Appraisals. So if you are financing a property, your lender is automatically going to order this appraisal from a third-party appraiser. If you're purchasing in cash, this is totally optional. We recommend it so that you protect yourself from overpaying for the property. Now, if an appraisal comes back below the contract price, your lender is going to require that you come to closing with some additional cash. You have to make up the difference in your down payment. So, you know, again, in a seller's market like today, it's pretty rare that appraisals are coming back low. But in the off chance that they do, you can try to negotiate with the seller to see if they'll reduce the price a little bit. Maybe they'll meet you in the middle. But again, understand kind of the context of the market dynamics and know that your leverage for negotiating reduction in price is a lot less than it was a year or two ago. But certainly worth asking. I mean, I've purchased properties before from RealWealth property teams that appraised, you know, slightly under what the contract price was. I mean, like, you know, less than $5,000 below. And, you know, I went to the property team about it, and, you know, in one case they were willing to split the difference, in another they weren't. And so then it's up to you as the buyer. I had that appraisal contingency in my contract, so I could choose to walk away at that point. Nobody likes to come to the table with more money for closing, but I had to remind myself, okay, what is the big picture here? You know, what is the true cost of this for me in the long term? And in both cases, I decided to proceed with the property. So you can definitely make that choice if you find yourself in that situation. Okay, number 11. So after you get the inspection report back from the inspector, again, carefully read the inspection report. Something that I always do after I have read the report fully and not just skipped through to the pictures, read it, I get on the phone with the inspector and I try to do it as soon as I can after they've given me the report so that it's fresh on their mind. Some of these inspectors, they're going and looking at, several homes a day. So I want to be sure I don't wait too long because I want them to remember specific things. But I always get on the phone with my home inspector after I've read the report to talk through any questions that I have. I almost always learn more about the property in that conversation than I did by reading the report. And some inspectors are very quick to tell you, hey, this particular item, I include it on the inspection report because it is something that's important, but it's not really that big of a deal. So if I were you, I wouldn't worry about it. I always ask inspectors at the end of our conversation, okay, so if you were me, you were purchasing this property, what would be the things that you would be most concerned about or that you would want, absolutely fixed to proceed with this property? And taken from a guy or girl who looks at as many properties as they do, I think that has some weight. Then I always go back and make a list of my must fix items. So I sit down again with that report and I look, item by item, what are the things that I'm willing to say, yeah, this is not really that big of a deal. And then what are the things that, hey, this is a deal breaker for me. Like if this doesn't get fixed, then I'm having second thoughts about moving forward with this property. And then send that list to the seller or to the property team. And this is where you can negotiate to have some of those items resolved. And a lot of times our property teams will surprise you. They'll go and fix even more than you request. They want the property to be in good shape too, because a lot of them are handing it over to their property management company immediately afterwards, and that will ultimately result in more work for their people if they don't take care of it. So, the communication in this transaction is not over at this point. Definitely go back to that seller, go back to that property team with those items that give you pause and give you concern. Now, this last step here, give them the time that they need to complete the repairs on the outstanding items. And then I always pay to send the original inspector back out for a re-inspect. I just want them to go back out on my behalf and confirm that those items that they said they would fix did in fact get fixed and they were fixed correctly. This I think is an important step. It usually costs a couple $100 to have them sent back out, but I think it's well worth it. Okay, number 12, shop and secure homeowners insurance. So I usually get a homeowners insurance quote before I even contract a property. I do it very quickly. I have kind of a go-to national insurance company that I use. I always get a quote from just so that I can do my initial kind of back of napkin analysis of the financials of a property. But once I have that property under contract, then I go and shop for insurance a little bit more just to make sure that I have the most competitive rates for insurance. So I have found that local insurance companies oftentimes have more competitive rates. I've found this to be especially true in Florida. So if you're buying a property in Florida or anywhere, you can ask the property team if they have some local insurance contacts or if they have a broker that they always work with. I've been connected to a couple fantastic insurance brokers through our property teams who are now my go-tos and who give me really competitive rates and who understand how to best insure myself from a portfolio perspective as well. So again, lean into the knowledge and the network of the property team that's there local. And then of course, ensure that your policy starts immediately after closing. Once you've kind of identified that insurance company, they're brought into the loop of communication with your title company, with your lender to get escrow moving towards closing. But you always want to confirm that the insurance is starting the first day that you own the property. Number 13, purchase owner's title insurance. So most lenders are going to require that you purchase a lender's title insurance policy, but an owner's title insurance policy is optional. So what this insurance policy does is it protects you in the event that a problem with the title is discovered in the future. And it's going to cost you to, settle those disputes or settle those problems, or maybe, it's going to cause you to lose money on the property. This policy, you pay it one time at closing, it offsets that risk for you. So I've given you kind of a list of some of the things that might come up with the title problem. Essentially, this insurance provider is running a title. It's a title company that's providing it, but they're running a title search. They're doing their due diligence to try to find these problems before you close, and then they're saying, hey, based on our research, like everything looks good to go. We don't see any issues. That's hopefully what they're saying. Maybe they're coming back to you and saying, we see there's some liens on this property, or the HOA's put a lien on it because they're delinquent on, the management fees or whatever. But basically they're saying, we're so confident in our research on the title of this property that we'll cover you for this fee if something is discovered in the future. It's not really expensive to do this, again, in the grand scheme of things. It's going to vary. The cost will vary depending on the state and depending, of course, on the price of the property. But on average, it's about $1,000. A range of 500 to 2,500, I think, is pretty typical. So 1,000 being a good kind of median estimate for what these optional owner's title insurance policies cost. We recommend it. So we're moving right along now. You've got everything moving towards closing. It's all moving in the right direction. I usually, once I get, within a couple weeks of closing on a property, I want to re-engage with the property management company to make sure that they're tracking the fact that I'm closing on this property and it's soon going to be handed over to them for management. So definitely keep them informed. Some new construction homes, you should know that they can't be marketed until after they've received a certificate of occupancy or until after you've closed on the property. Some builders just will not allow you to kind of market the property for rent until it's actually yours. So there could be some discrepancy there depending on the deal, but some management companies can go ahead and start marketing that property that it's coming soon. And so, I mean, I've had it happen where, property is already leased up. I have approved applicants for the rental before I even close on the property. So that's always awesome when that happens. Definitely make sure that you have signed the management agreement and then use this time to log in to your owner's portal. I think all of the property management companies that we use have some software system that gives you an online portal where you can log in, set up an account. You can see maintenance work orders that have come in. You can pull statements, spend some time and maybe get on the phone with the property manager to kind of give you an orientation of how that site works. Some property management companies will have you send them an initial balance to be held in your account. Maybe they want to have a minimum, $300 balance in your account before it's actually tenanted. So take care of all of that housework, that housekeeping stuff before, in preparation for that closing date. Okay, so we are moving to the fun part. We're about to close on this property. So we're moving into phase 3. This is steps 15 through 18. I see a bunch of questions have been coming in while I've been going through this. We're going to get to them. So if you've thought of a question of something that I haven't covered yet, go ahead in preparation for Q&A. You can send it in, but let's get through this last section here. So number 15, signing your closing documents. Closing documents will have to be signed in front of a notary. So you want to consider traveling to the location to do this in person. I personally have never done this, but some people do every time. You can definitely travel to the location, do the final walkthrough yourself, and then sign the documents in person. But it can all be done remotely. I'm here to say it can be done from Europe. It can be done from South America. You do not have to travel to the location. You just have to get in front of a notary. So there's even mobile notaries now, so they can come to your house. So that makes it super easy. Once you've experienced that, I don't ever go to any of my closings. I just like them to come to my house and keep it pretty easy. Sorry, my earbud here keeps falling out. Now, this next point here, last minute delays with closings are extremely common. You've got a lot of different people all working together for the common goal. You've got your lender, you've got your title company, you've got your insurance broker, you've got the seller, you've got brokers. Everybody wants to close this deal. But there's a lot of moving parts that have to come together at the very end. So delays at the last minute are common. You've got to be ready to roll with the punches a little bit. It's frustrating. It's sometimes time consuming to have to go back and get maybe a file back to underwriters again. It can be frustrating, but just know it's extremely common. But everybody is ultimately working towards that goal of closing. What I recommend you do, as soon as you know that closing is probably not going to happen for one reason or another, make sure that everybody involved in that transaction knows about those delays. So if you receive word from the seller that something happened, maybe they didn't get a final inspection that they needed in time, immediately go and just ensure that everybody's on the same page and that everybody knows about the delay. Delays can sometimes have some impacts to your financing. Those rates that you lock, they have an expiration date. Oftentimes it's 30 to 45 days that a rate lock is good for. So, if you just delay closing just enough to go past the expiration date of your rate lock, your lender can sometimes get that extended for free for you, just a couple days, but in some cases it can cost you to hold that rate lock. So again, it's frustrating, but roll with the punches a little bit. This act of transacting can be, it can require some grit at some times. So just be prepared to call on it. All right, so by the time you get to number 16, you own this property, it's yours. So now is the fun part, maybe where the real work actually starts. Now you've got to manage your property manager. So I think some people are under the false impression that once you close this property, you just never have to do anything for this again, and that the checks just start coming in. But that's not the case. You're always going to have to manage your manager. Even the best property managers out there occasionally drop a ball. Even the best managers out there, if they don't know what's inside your head, they don't know about your personal financial situation. So you're going to have to be involved and manage that property manager. I included this next bullet here because I've experienced this on just about every property that I own. You're going to have to work through some of those inevitable startup kinks. It's just getting a property going. It is so common that something gets missed, or that the portal access isn't working, or that you weren't aware that this tenant was approved, or but you're gonna have to work through it a little bit. Get the property leased up. Everybody's new here in this relationship, and so communicate, but work through those startup kinks. Review all of your monthly statements every month. You'd be shocked how many times I hear of people not discovering that they weren't getting rent checks, or that some major maintenance item was done months after it occurred. I don't know how that happens. You've got to check your statements every month. Establish your own system for tracking that. For me personally, I have kind of a master Excel file that I use, where every month when I get the direct deposit, when I see it hit my bank account, I come into that specific property's portal, I log in, I pull the statement, we review it real quick just to make sure there isn't anything unusual or strange, and then we track the fact that we received rent for that house in our tracker, so that we can see at the end of by the 10th or 15th of every month, we know, okay, I've received all my rent checks that month. So develop your own system for staying organized. I'm going to share another little tip here. I also include separate pages or sheets in my Excel tracker for each property, where I keep all of the most important information for that property, the current tenant, the current lease term. I have a URL for the property management portal. I have my login information. I have the points of contact. I mean, I keep all of that, because once you get a couple properties, it's impossible to keep everybody straight, right? Unless you're scaling with one team, one manager, you've got to have a system to stay organized. So I encourage you to kind of develop your own system and figure out what works for you. Definitely reinforce that you have the correct points of contact for maintenance items, for billing issues, for lease ups. Some property management companies they delegate the tasks a little bit differently. Some management companies, you have one point of contact and they're the jack of all trades. They coordinate all those services for you internally. Whereas other property management companies, you go to one person for billing, one person for maintenance, one person for leasing. I mean, it's really just going to depend on the management company. So if you have a preference for that, ask that question when you're conducting your due diligence on the management company. All right, and then number 17, give RealWealth some feedback. Let us know how it's going. Again, we're all in this boat with you. We're purchasing from these teams too. While we're not licensed brokers in these states and we're not able to give you specific property advice, and we're certainly not attorneys, we're certainly not tax preparers, we're certainly not property managers, we've probably been through what you're going through. So let us know if you're having some challenges. Let us know if you're having some great successes. Your feedback is what solidifies the strength of our network. The feedback that we get from you guys, we use to help us, establish the best relationships in all of these markets. So if you're struggling with something or you're confused about something, let us know, and we can hopefully help you get involved if we need to. And then number 18, check in with RealWealth before you choose to reinvest with a company. So once a team has established a relationship with you, they might approach you with some additional investment opportunities, maybe even a little bit outside of the scope that we would normally recommend them for. So just touch base with us so that we can let you know if there's anything that has changed in our relationship with them. Occasionally we've had to remove a team from our list. And if you're not on the RealWealth site regularly, you might not know that they are no longer a preferred property team at RealWealth. And so just touch base with us before you replicate in a market or before you choose to scale, just so that if there is something that you should be aware of, you can learn about it and then make the best decision for you on how to proceed. There's all of our beautiful faces, all four of us, myself, Ben, Aristotle, and Joe. Again, you guys have all been assigned to one of us, so feel free to connect with us. Okay, so that is it. I know we're coming up on the hour, but you're all still here. So we're gonna get through some of these questions, but before we do, we've got another poll. Well, I don't think this one's a poll, actually. I think this one we're gonna put in just the questions section. Celia, hop in if I'm misspeaking there, but I believe that's correct. I wanna know, I talk to you guys all the time. Some of you have genius ideas about due diligence. So do you have tips that you always do when you're transacting or when you're acquiring a new property? If you've got one that we didn't talk about today, send it in to the question so we can all benefit. If there's anything that we should have added to our investor checklist, we would love to know. So we'll look for those in the questions box here. All right. On that note, let me pull open my questions box here. Bear with me just a second while I get this set up. They make this so tiny, so let me get it big here. Okay. If doing a 1031 exchange, do we wait until after our property sells to get pre-approvals from lenders? No, John, I definitely think you should be talking with a lender in preparation for a 1031 exchange, because you can lever the equity in the relinquished property out fully. I mean, you can use the equity as a 20% down payment and lever it out all the way, but you have to be able to qualify for the loans. So until you've kind of talked to a lender and kind of understand what your new borrowing potential is, again, it's all hypothetical. So definitely, as part of your kind of preparation for even considering a 1031, hop on a call with a lender and get yourself pre-approved and understand exactly what you can borrow. Gosh, this is so tiny. Let me see if I can get this bigger. Here we go. Okay. Okay, someone asks, where can I find those 4 videos to watch that you mentioned? Mark, if you're referring to the new investor curriculum series, you can find them on the investor portal. So when you're logged in under the resources section, I believe it's the 3rd or 4th link down, it says Investor Resources, and then you'll see a subsequent drop down where you have the new Investor Curriculum series. It's great. They're real short, but they give you a lot of information. You mentioned the fear of conflict of interest between a property manager and a developer. How about conflict of interest between an appraiser and a developer? Oh man, conflict of interest with appraisers. That could be a long conversation. You know, there's some mysterious ways about appraisals, at least from my experience. Yeah, I think conflict of interest, certainly there's always potential for that. So, you know, you're your best advocate of doing research. The good news is that if you get an appraisal that seems totally wacky coming back, then you can order a second appraisal as well. You can get an additional appraisal. Someone points out, through your recommendations, we're looking at doubling our closing. Are we looking at doubling our closing costs? I mean, you're probably not doubling your closing costs, but again, they're optional. So if it's too much for you, I mean, if you have a high risk tolerance, I personally have a pretty healthy risk tolerance. You know, I'm asked to move around the world and just show up somewhere and create life. So the idea of purchasing a property, you know, remotely, I have just a comfort with. So, you know, for me, I don't go and purchase generally all of those supplemental inspection items. It's totally up to you. But in the grand scheme of things, I mean, this is a strategy to build some serious wealth. And so getting hung up on, you know, $100, $300, even $1,000, it's just a drop in the bucket in the long scheme of things. What options do we have to cancel if the seller cannot negotiate when the appraisal is not favorable? What are the biggest downsides that we should expect in such a situation? For example, money lost on inspection, earnest money. Yeah, that's usually the consequence is you forfeit the earnest money. So again, depending on what my earnest money requirement has been, I might be less willing to terminate depending on what that appraisal came back for. You know, generally you don't want to overpay for a property, right? But again, for me, I always try to think about the long-term motive of why I'm doing this, you know, and I hear people, you know, say that you make your money in real estate on the buy. And I just don't think that's true for long-term buy and hold investors. I mean, we know over time property values go up. Yes, the market fluctuates, you know, markets are cyclical, but over time we can look historically, property values do go up. So I'm less concerned about, you know, paying a couple $1,000s over what an appraiser says the property is worth. But it's really going to be deal specific. And it's really going to depend on, you know, where you are in your portfolio building too. But just don't get, you know, put it in the proper context and then make the decision that you feel comfortable with. But I know some of these new construction properties, you know, and some of our teams, they require 10 to 20% down in earnest money. So that appraisal would have to be grossly wrong before I would be willing to walk away from earnest money like that. So just know that before you enter the contract. Mark says, what type of things do you mean to manage your property manager? I think we've covered some of that a little bit. I mean, I really don't, you don't want to be the guy that your management company hates, right? There's some people who just nitpick every single thing that the manager does. And I can assure you that probably doesn't earn you any favors of how they handle your property and how they choose to engage with you. You know, be conscious of the fact that you're building a team, right? You need them to work for you. You need this to be a good relationship. Of course, there's some circumstances I trust, but I verify, right? There's some circumstances where, you know, things from my vantage point maybe have seemed out of control or like they just weren't knowledgeable, especially over the last year with the weird moratoriums on evictions. I mean, that was hard to keep track of. And I felt for property managers who were trying to keep up with their normal jobs in addition to, you know, these moratoriums. And so, you know, in circumstances like that, I managed the situation that I was in a little bit closer, not because I didn't trust the management company, because I recognized like this is a potentially big problem. So I need to be a little bit more engaged in finding the solution and finding out what our options are. So, you know, I think you just need to stay involved. Don't just give blind trust to somebody, because ultimately nobody cares about this property like you do, right? So have some good cautious oversight, but don't nitpick how they execute. What about the transfer of utility services? Whose name is it in? Sharon, this will depend on the market. I mean, there's some markets where utilities have to be in the owner's name, but then there's some markets where it's in the tenant's name. I have some property managers who they will move the utilities when it's in the interim, they'll move it into their name, you know, when I'm in between tenants. Some of I've given power of attorney to, so they can go and do all that for me. It's really going to depend on the market. So as part of your due diligence, when you're talking to that management company and you're considering entering that market, understand how that specific city might require you to handle the utility services. Your property manager should be very familiar with that. I'm working with a RealWealth property team in Florida for a new build in Ocala. The property delivery and close date has been pushed back twice now. Yep. Try, I'm with you. The new builds have been a moving target. Your next question was, is that normal? Absolutely. Very, very common right now. You know, construction supply chains have been massively impacted in the wake of COVID. So we have seen and experienced lots of delays. Ocala in particular, I've heard is a lot of the issues are with permitting because they have so many new starts, so many builders trying to build and get permitting that the cities are backlogged. And so, yeah, it's normal. It's frustrating. Stick with it. Be communicative. Be patient. But yeah, it is unfortunately pretty typical right now. That's why we caution our 1031 buyers to proceed with extreme caution for new builds because those delays will add up. Okay, Katie, we're getting to some of the pro tips here. This is great. Okay, I hope you guys all stuck around for this. So Katie says, if it's possible to check out the neighborhood at different times of day, weekend versus weekdays, look for traffic patterns. I think that's a great tip. Some places look super nice and safe during the day, during the middle of the weekday, but maybe at night or on the weekends, it's a totally different vibe. So that's a great tip, Katie. And if you're doing that from long distance, see if you can get the broker, the property team, or the agent that's working with you to go out there and drive the street for you at a couple different times and give you some, you know, FaceTime you so that you can see it. Winston says, the first place that I look for economic data and population growth is the local chamber of commerce. I like that. Yeah, you're right. Market data is so localized. So going to your local chamber of commerce is great. And it can tell you kind of, I think you can see a lot of posturing of the city and kind of maybe their stance on business by looking at, you know, kind of their positioning for how business friendly they are. Is it a good idea to meet the home inspector while they're actually inspecting the property? Yeah, I mean, certainly if you can be there, that's great. I mean, I feel like that's an opportunity to learn and apply that knowledge on subsequent purchases too, right? If you have the luxury of being able to travel out to the destination multiple times, then certainly you can do that. Joe Torrey, one of the investment counselors here at RealWealth, he says, find an appraiser that's recommended by your lender to get an objective opinion. So I guess maybe that's in response to the conflict of interest comment from earlier. Someone says, do all the counselors do webinars? Yes, Felipe, we all do. In fact, Joe, who I just read a comment from, he recorded a great webinar on due diligence just a couple weeks ago. It is under recent webinars on the investor portal, but we all rotate through and do these so you can hear from all of us. Are there any expenses to avoid when doing due diligence? Anything that you wouldn't consider to be worth it? Oh, you know, nothing comes to my mind immediately, like don't ever do this, because it really just depends on the deal. It depends on the person. No, I haven't experienced anything that I'm like, don't do it. Other than some of those optional supplemental inspections, I just personally don't choose to do. If anybody has one, share that with us. If there's an expense that you've done before where you said, nope, not worth it, never doing that again. Have you ever had a tenant get moved in before the utilities are in the name and then they refuse to put them in their name? No, I have never had that happen. I suspect it's possible, but I would assume you could have the utilities turned off if they don't put it in their name. I would definitely lean into a property manager if I found myself in that very strange situation. I have never encountered that. Most people want lights and water at their house. Oh, sorry there. Getting to the bottom of these here. Katie says, I had 9 different closing dates on my Florida new build. Me too, Katie. I had a closing in Florida that was just challenging, and yeah, so I feel you there. It happens, and when it gets delayed that many times, then you are running into problems with the rate lock, because once you let a rate lock expire, you have to wait another 30 days before you can relock, and yeah, it can get messy. So I feel you. Been there. All right. Is it better to select with a lower credit score potential tenant because they won't be looking to go and buy a house and more likely to stay a tenant? That's an interesting strategy. I guess it would depend on why their credit score was low, right? Oftentimes credit scores are lower because they have problems paying their bills. So I would say in that case, it is not a good idea to rent to someone with a lower credit score. If they're willing to offset that risk, maybe by giving you a larger deposit. I had a tenant once who had a lower credit score who was willing to pay for 12 months of rent in advance. And so I was willing to do that. So it really just depends, but generally I would stick to the guidelines of your property manager. The reason they've set those standards is because they have seen, more macro data that indicates these, or that tells them these are indications of future problems. So I hesitate to go against their recommendation generally. I also find well-vetted contractors and related real estate services by checking in with the local B&I groups, Business Network International and local RIA groups. Winston, you are coming at us with some great suggestions today. That's another good tip. Yeah, you got to be careful with finding your own contractors if you're using professional property management. I mean, I have had some management companies before who have said, look, if you try to find your own vendor outside of us, of our preferred list, then we cannot manage that repair for you. You're going to be managing that yourself. So just be sure before you go and solicit your own vendors that you understand how your manager may or may not be involved in that process. All right. A couple questions here on, well, let's see. Let's keep going here. How do you handle landscape maintenance on a rental? John, that's usually included in your lease agreement, how the landscaping is going to be maintained. Most leases that I have require the tenant to maintain the property, the landscaping, but it just is going to depend. Does RealWealth Network have a Performa that we can use to evaluate properties? Yes, Quay, we do. So on RealWealthNetwork.com, so that's the home page. That's before you're logged in. On the RealWealthNetwork.com, you'll see that there is I think it's under the resources section. There's a whole section there that says investor resources. The very bottom two, at the far bottom right, is a master Performa and a property analyzer. The property analyzer has 3 Performas side by side so that you can do some side by side comparison of a couple different deals to each other. They're pre-populated with formulas. It's super helpful. So definitely go and download those. I use those myself too. I mean, that's how when I'm looking at deals anywhere, I can just populate my own Performa. You can manipulate some of the reserves that you want to have there. You can manipulate the down payment. So definitely check out those tools there on the home page. Typical expenses when a tenant moves out. Sharon, this is going to depend. This is kind of the unknown with investing in real estate. You can have a tenant who lives very gingerly and very carefully and is very great at cleaning every single corner when they move out, and then you can have some tenants who leave all their stuff when they move out. And then you've got to pay to haul all their stuff away. I mean, it can really vary. I would say if I was to give you kind of an average, because that's really all you can do when you're looking at real estate is an average, right? I would say most tenant turns cost about $1,500, maybe 15 to 2,500, depending on a couple different factors. But I mean, I've had some terrible tenant turns where people did some really bad damage, and it was costly to put it back together. So sometimes you can come after their deposit, right? Sometimes you can come after them afterwards in small claims court, and your property manager can help you with that to try to get the damages back. But it is challenging. So you've got to have some good cash reserves to offset that kind of unknown variable. That's why you want to keep tenants for long term, right? Those turns are expensive. So reduce them as much as possible. All right, let's see. I think that is about it, guys. This has been so fun getting to hear from all of you. I hope you've enjoyed this. Again, we'll get the replay posted tomorrow. So if this just felt like an overwhelmingly large amount of information to sift through, come back and watch the replay when it's applicable for where you're at. And of course, reach out to any of us if you ever have questions. We're here for you guys. We're so excited to be connecting with each of you. Thanks again for watching. I hope you all have a wonderful 4th of July weekend and that you enjoy some safe fireworks and time with friends and family. Take care. See you later.